Here is the first tick on the index, consolidating after its gains from yesterday. The Nifty up about 30-odd points.
Nifty and the Sensex building on yesterday's rally. The Nifty comfortably now above that 18,300 mark.
The markets are virtually at the day's low. We have come off around 65 points from the highs of the day.
We are absolutely flat, blinking red and green. So it's been a fair bit of drop-off which has happened. 18,344, nothing dramatic. For now, we're going to end with about 5-6 odd point, 7-point cut on the Nifty. It was looking like a smooth journey in the first half, 60 points, 65 points at the day's high, but in the red by close.
Hello and welcome to Markets Today. This is the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy and here are all the top headlines that we're tracking for the day. The Sensex and the Nifty give up their early gains to end flat. After a late sell-off, the Nifty remains below 18,300. Mid-caps marginally outperform the blue chips. Pidilite gains close to 1% despite reporting lower than expected revenues and net profits. Margins also decline while Birlasoft and Mahanagar Gas climb over 7% on strong fourth quarter results. And Mankind Pharma makes a strong debut on Dalal Street. The company's shares listed a 20% premium to its issue price. Mankind Pharma's over 4,300 crore IPO is the largest in the pharma sector. And Zomato skids over 6% even as Invesco marks down its Swiggy valuation. And ONDC emerges as an alternate platform for food ordering. One factor working in favor of ONDC is the sharply lower prices. Is that enough? Is the big question. Gold prices ease after hitting a record high in India last week as investors cautiously await US inflation data. China increases its gold reserves for the 6th straight month. Well, here's what we have for you on the show in the next half hour. It's a packed show today. In Market Opinion, we have Krishna Kumar Karwa, the Managing Director at MK Global. In Big Corporate Voices, Rajiv Juneja, the Managing Director of Mankind Pharma, and Bharat Puri, the Managing Director at Pidilite. Okay, straight to all the action from Dalal Street. A last hour fall saw the Nifty and the Sensex end absolutely flat. The Nifty ended the day below the 18,300 mark, while the Bank Nifty underperformed the blue chips to end a 0.25% lower. ITC, SBI and ICICI Bank were the big laggards today. Prashant is here with the day's trading highlights. Prashant.
Well, the market started with a lot of promise in the morning. The promise of follow-through after yesterday's very strong session. And the index actually went up 65 points to the day's high, which was around 18,350. And then starting mid-afternoon, gains started disappearing. We actually dipped into the red and closed absolutely flat in both the Nifty and the Bank Nifty. Broader markets also completely lost the momentum. Declines outnumbered advances. It was 2:1 in favor of advances earlier, so it was a complete flip-flop. Let me start with the large caps. The losses coming through in UPL, which reported earnings. There were earnings cuts today. ITC, which lost a little bit, and SBI. Actually, financials once again played key roles, both on the upside and on the downside as well. On the upside, Divi's, Coal India, and IndusInd Bank. IndusInd, of course, did very well yesterday, and there was some follow-through, small follow-through today as well. But outside of the Nifty, where the real price action lay, so look at Zomato, for example. Big volume-led losses today on Zomato. Apar Industries came under pressure. Huge volumes. We don't see that kind of volumes usually. Indiabulls Real Estate lost. Their entire railway infrastructure stocks, IRFC, RVNL, etc. Adani Transmission came under pressure. Oracle Financial Services. You had actually PSU banks which came under pressure for the second straight session. PNB, Indian Bank, and so on and so forth. Westlife was another noticeable 5% loser that we had. There were gainers as well, fewer in number, but decent list. MGL, Birlasoft, some reacting to numbers. Tata Communications, there was Greaves Cotton. KEI did very well yesterday, follow through today. Venus Pipe, Sula. Jindal Poly was another one which did very well. Was the market a bit nervous? Did it want to keep it light going into the Karnataka polls tomorrow? Because the state is going to polls tomorrow. Tomorrow evening, we will get the exit poll results. And it's a state election, but markets will pay attention in terms of what that throws up. Tomorrow evening, US market time is also the big data point globally, which is the core CPI out of the US. So there is a lot to deal with. Today was a do-nothing kind of a day, the market ending absolutely flat. And tomorrow, we will deal with all of these incoming data points. Back to you.
All right, Prashant, thanks a lot for that. So that is what happened on Dalal Street today. Largely, it was a day of consolidation. But remember, the bulls have tightened their grip on the market and today just took a little bit of a breather. But Fitch has affirmed its lowest investment-grade sovereign rating for India at BBB- with a stable outlook. The ratings agency cited India's robust growth outlook and resilient external finances as the key supporting factors for the rating. However, the agency has warned of weak public finances and lagging structural indicators. Fitch has also gone on to say that they forecast India to be one of the fastest growing rated sovereigns globally at 6% in the fiscal year ending March 2024, which has also kept India's ratings unchanged since August 2006. Well, in market opinion, Krishna Kumar Karwa, the managing director at MK Global, is betting big on the banking sector. He says that banks have delivered strong fourth quarter results. He also gives his views on new age companies. Take a look.
Banks have given very good numbers, but the question is that are we looking at peak in terms of the bank's profitability, credit costs, etc. And going forward, or in the next few quarters, or maybe 2-3 quarters down the line, how do you expect the banks to perform? My question is that yes, numbers have been very good for banks, and banks have recovered from their lows in the last 30-45 days. But in terms of valuation multiples, will we see any expansion of further valuation multiples, or are these most of the banks now getting into a territory where they could be kind of earnings compounders? Some of the companies have delivered also on numbers, and market is also looking at them positively. So there are opportunities. Valuations have become attractive, and if you feel that there are some winners in the segments, then they should be invested in. A few of the companies have started attracting a lot of investor interest. So yes, not to ignore them carte blanche, but independently, I think they should be looked at.
Okay, well, on to the second headline now. Pidilite closed 1% higher despite missing street expectations on all parameters. The company reported a net profit of over 280 crores versus an expectation of over 320 crore rupees. Pidilite's consumer business volumes also came in much lower than the expected range. The management is expecting growth to return in the first quarter of FY24. Pidilite has now also forayed into the paint segment. Listen in.
Overall, we've always said we'd like to grow it, in a volume sense at GDP growth rates, and in good times, probably try and grow 1 to 2 times GDP. That's what we're tracking. You take a step back, you look at the year, we've grown our consumer businesses over 20%. We've grown volumes very healthily in double digits. And the good news is that margins are coming back. If you look at the fourth quarter, gross margins have improved substantially. What is encouraging, obviously, for us a lot more is if I look at my March exit margins, they are frankly in my guidance range of 20% and above. You select geographies and see how we complete the range. So by no means is this a full-fledged 5-plant launch, so on and so forth, etc. This is a range completion exercise where we are saying that, listen, dealers should be able to satisfy their customers with one company's range, and therefore in select geographies we've launched a range of decorative paints. First, let's start with the fact that every paint company has entered all of our categories, and they're most welcome to. It's a free country. You can see our performance after their entry, and frankly, as leaders, you will always expect competition only to increase rather than remain constant or decrease.
All right, well, let's move on. Birlasoft surged over 7% on the back of a good set of fourth quarter numbers. The net profits came in at 112 crores versus 16 crores in the previous quarter. The company has also reported an EBIT of 145 crores versus 13 crore loss in the third quarter. So very good set of numbers, and the stock was up 7% by the end. Rima joins in with more on that. Rima, over to you.
Thanks so much for that. So it's a good quarter by Birlasoft this time. If you remember, in the prior quarter, one of their big clients, Invacare, had filed for bankruptcy, as a result of which their revenues were impacted, the margins were impacted. The company reported a loss in Q3. But now things appear to be turning around, ex of that Invacare problem. So the company said that in the current quarter, like to like, if you strip out the Invacare revenues in the prior quarter, the revenue growth has been more than 30%. Deal wins too have come in very strong. They've gone up by more than 20%, nearly 24% on a quarter-on-quarter basis. And that's the reason why, given the improvement improvement in margins, the company has reported a profit of nearly 112 crores. The management guidance, yesterday there was a conference call and there they said that FY24 growth is going to be a bit muted because last year, FY23, the company got about $14 million of revenue from Invacare. That will not be there this time. So the reported revenue numbers will be a bit muted, but the company is targeting margin improvement. So they're saying 15 to 16% margins in the second half of FY24, finally hitting 16% by Q4 of FY24. And this would compare with margins of 13.6% that they clocked in. So they are looking at a margin expansion. MK has raised their EPS estimates by 1.5 to 2.2%. Factoring in the Q4 beat and higher margin assumptions, they've also raised the target price to 340 and they are valuing the stock at 16 times forward multiple. Back to you.
All right, thanks a lot for that. Well, UPL slipped close to 3% on a weak fourth quarter. The company reported a big miss on net profits at over 790 crores versus an expectation of over 1,800 crores. Even margins came in at over 18%, but they were below street estimates. CEO Mike Frank is expecting a very healthy cash generation, though, from the business. Take a look.
Now, as we look ahead to FY24, at guidance, we're guiding on revenue of 6 to 10%, on EBITDA of 8 to 12%. And again, we're expecting a very healthy cash generation from the business. Now, this year, unlike last year, we're not going to make a guidance on paying down net debt. We're quite happy with the current leverage that we have. Coming out of COVID in China, what we saw is the post-patent manufacturers of active ingredients in China really increase their overall productivity and supply into the market. And as they did that, prices started to decline. And as prices started to decline, it really froze distributors from buying products when they saw the price was moving quickly. And so as the quarter played out, we saw that prices came down almost on a daily basis in the last part of the quarter to where they are now.
All right, in some more earnings, Mahanagar Gas climbed over 7% on the back of a strong fourth quarter. The company's margins at over 24% came in much higher than the estimates of 20%. Profits were a beat at over 260 crores. Sonal Bhutra joins in with more on that. Sonal, a strong set coming in?
Big move on Mahanagar Gas, and that is on the back of strong set of numbers that the company has reported, especially on the operating side, though it was a slight volume miss for the company in quarter 4. Going by the numbers, revenues, yes, they did decline 4% on a sequential basis, but that was expected, largely in line with the poll. EBITDA was up 52% on a sequential basis and came in higher than the poll at 390 crore rupees. Margin was a big beat, 24.2% versus an expectation of 20.4%, leading to a beat on profits as well. Profits were higher by 56% on a sequential basis to come in at 270 crore rupees, which is way higher than what the street was working with. As I said, volumes were a miss. Volumes declined 1% on a sequential basis versus an expectation of 2% increase. So that is where we need more clarity from the management from. And EBITDA margins per unit came in at 12.8 rupees per SCM, and this is a 7-quarter high number. So price hikes did really help the company in the quarter gone by. And now Jefferies says that they expect strong earnings in the second half of FY24, largely led by the falling LNG prices globally. They will look out for management guidance, especially because there has been a sharp price cut in the month of April following the cut in domestic gas prices. They have a target price of 1,100 rupees per share on the stock. The conference call is at 4 p.m. today, so of course we'll get more clarity on that one. But the other city gas distribution stocks are also doing really well. Both Gujarat Gas and IGL higher in trade today. And if we look at the valuations, both Gujarat Gas and IGL trading at similar levels of around 21.3 to 21.6 times one-year forward earnings. What works for MGL additionally also is it trades at the cheapest valuations in the city gas distribution space at 12.8 times one-year forward earnings. And that is something also working for the stock in trade today.
Okay, well, the third headline today, Mankind Pharma made a strong debut on Dalal Street. The company shares listed at a 20% premium to its issue price. The company's 4,300 crore IPO is the biggest issue in a year and the largest by a pharma company after Gland Pharma's 2020 IPO. Ekta Batra joins in. Ekta, a good listing after a long IPO winter.
Well, yes, it's a strong debut coming in for Mankind Pharma, which in fact is the largest pharma IPO after Gland, which debuted in 2020. It has listed at the higher end of the price band at around 1,080 and raised around 1,297 odd crores from 77 anchor investors. It was subscribed around 15.32 times with QIB at around 49 times. So it has seen a lot of institutional interest, though in terms of retail subscription, it was still sub 1 times. Now, in terms of a couple of key points about the business, it gets around 98% of its sales from India. Pharmaceuticals is 90% of its business, but the consumer healthcare, which is around 9 to 10% of sales, has a strong amount of brands in it, such as the likes of Manforce, Unwanted 72 and Prega News. Its key USP is affordability, accessibility, with pricing at around 15 to 20% cheaper than what is available in the market. Now, in terms of a couple of key points on growth, the company is working towards the launch of new products to ensure growth going forward. The EBITDA margin is likely to be in the range of around 25 to 27%, so an improvement from the 9-month margins. They don't see anything wrong with the family being involved. They are looking to professionalize gradually, and they are not perturbed by competition in Tier 1 cities. In terms of a valuation on a 1 year forward, it's at around 30 to 31 times now, which is less expensive than a couple of the pharma MNCs, but nonetheless, it is a little more expensive at this point in time when compared to the likes of Suns and Ciplas as well as the Alchems of the world. Macquarie has written on it. They've initiated with an outperformed target price of 1,400 rupees. According to them, the company appears to be well positioned to double its profitability by FY26.
We are in a transition mode. Everything happens at its own pace. And if you ask me what basically is a thought process in Mankind, we want to be the most admired company. We want to institutionalize Mankind Pharma. Every department is being controlled by the right professional. We are hand holding. And what's wrong in if some kind of involvement of a family is there, because whenever any kind of hurdles are there, we are always there to hand hold them, clear the roadblocks. When family is involved a bit, I mean, that really shows how passionately they are involved. But there's no doubt that we are on the path of professionalizing it.
All right, moving on, Indiabulls Real Estate plunged nearly 20% after the company announced the merger of NAM Estates and Embassy One into the company has been withheld by the Chandigarh bench of the National Company Law Tribunal. Sonal joins in with more details on that. Sonal.
Well, it has come in as a setback for Indiabulls Real Estate. Now, remember, it was in 2020 that they had announced this merger with Embassy. Until now, the final approvals have not come in. To just give you the news first, sanction to merger of NAM Estates and Embassy One, which are two Embassy Group companies into Indiabulls Real Estate, has been withheld by NCLT Chandigarh. Now, remember, NCLT Chandigarh had earlier raised concerns based on some of the observations by the IT department as well. This has come in as a setback because this was supposed to be the final approval for the merger, and it has been getting delayed for quite some time now. And if these two get merged, Embassy's stake in Indiabulls Real Estate will come to 45% from current 10 to 12% as well. So now, of course, this has come in as a setback for the company. The company says that merger already stands sanctioned by NCLT Bengaluru bench. Bengaluru bench has jurisdiction over NAM Estates and Embassy One, which is the Embassy Group companies, and Chandigarh bench has jurisdiction over Indiabulls Real Estate, and this is the one which has been stopping this merger for now. They say that they believe these objections and concerns were unfounded, unjustified, and do not impact the merger as well. They are awaiting the detailed order, and they will go ahead and appeal against this order. So that is going to be the next course of action that the company is going to take. But definitely a disappointment, because there has been a long pending wait for this approval to come by, and looks like it will take longer than what shareholders had earlier anticipated.
Okay, let's slip into a quick break, but stay tuned. We will be back with all the other headlines in just minutes from now.
I am slow. I'm a tortoise. But your wealth managers, they shouldn't be as slow. You know?
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
Balcony? सेम है।
ड्राइंग रूम
भी सेम है।
किचन एरिया
सेम है।
हमने लिए 90 लाख में, आपने लिए 80 लाख में।
ये सेम क्यों नहीं?
क्योंकि आपके और हमारे होम सर्च ऐप सेम नहीं है। जानिए प्राइस ट्रेंड्स और सही ट्रांजैक्शन प्राइसेस ऑन 99acres.com। घर लेना हो या बेचना, 99 acres से ही पूछना। हमारी प्रार्थना होगी स्वीकार।
Z-Block Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
An exquisite solitaire, truly special.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC. LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
Welcome back to Markets Today on CNBC-TV18. The fourth headline today, food delivery apps Zomato and Swiggy have a cause for concern after enjoying years of duopoly in the sector. A new player, the government-backed Open Network for Digital Commerce or ONDC, has emerged on the horizon and has the potential to disrupt the ecosystem. Zomato tumbled over 6% today. Shilpa Ranipeta finds out more on the ONDC opportunity. Take a look.
In the past few days, many users have started using ONDC for food delivery, with the orders in fact doubling to about 20,000 in just the past couple of days. Now, these users have been pointing out how significantly cheaper it is to order food on ONDC, though some have complained that delivery is taking much longer. But the larger discourse is that ONDC could potentially be the next big thing for food delivery. But is it really? Let me explain. Now, unlike Swiggy or Zomato, which are integrated platforms that control the end-to-end food ordering experience, ONDC is an open network where the restaurant can list itself. Then you log on to a seller platform like Paytm, you order from there, and then the restaurant fulfills the order either directly or with the help of a logistics partner. Now, what is making ONDC so much cheaper, rather ordering on ONDC so much cheaper, is that while Swiggy and Zomato charge restaurants a commission of 18 to 25%, it's just about 2 to 6% now on ONDC, and not to forget the massive discounts that are being offered by the restaurants, by platforms, and by ONDC itself. But does this mean that ONDC will disrupt Swiggy and Zomato? Well, one thing is there. ONDC does take away the single platform control for restaurants and gives them better visibility. And I spoke to a few experts who say that the unit economics are definitely better for restaurants on ONDC, while they currently don't make money on Swiggy or Zomato. And the low prices are obviously more attractive to the consumers. So ONDC is likely to emerge as a third alternative for restaurants and consumers, and could maybe take away about 10 to 15% of the orders from Swiggy and Zomato, and this could potentially even force both these platforms to relook at their high commission and other charges. But what is more important to note is that the current discounts, experts say, on ONDC are not sustainable in the long term. Food delivery also has several factors at play that make it a seamless experience. Things like speed of delivery, being able to handle high volumes, especially at peak hours, having a superior tech, making it seamless, and also capturing data. And more importantly, customer trust that the food will be delivered as promised, and if issues arise, what part of the ONDC network will be able to resolve that dispute seamlessly. These will be key for ONDC to succeed going forward.
All right, let's move on to the fifth headline now. Thanks a lot, Shilpa, for that. Gold prices eased after hitting an all-time high as investors cautiously awaited the U.S. inflation data. Separately, China increased its gold reserves for the sixth straight month. However, Edward Moss, the managing director and global head of commodity at Citigroup, remains bullish on gold. He expects prices to reach $2,400 per ounce. Take a look.
So the gold prices are really in anticipation of what's going to happen to interest rates and what's going to happen to the U.S. dollar. So it's a precursor to what is believed will be coming. The flows have not been as vibrant as you might think. So when we see a move one way or the other, it's because the liquidity in the market in terms of moving in and moving out is not great. Central banks have been a little bit on pause in terms of buying gold, and we're nowhere near where the open interest was a couple of years ago. So it's an anticipatory move, very much so, and clearly there could well be a lot of money to be made. On the other hand, we've got to remember that it is based on what the value of the dollar is portrayed to be, and we don't know what that's going to be until we get to next year. Yeah, we certainly are. We think it could go to over $2,400 an ounce, and our probability on that is fairly high. So yeah, we remain bullish gold, but we have to remind investors that this is a choppy road, and they need patience.
Okay, with that, it is a wrap on this edition of Markets Today. Thanks a lot for watching.